What's going on, y'all? Happy Monday, and welcome to the latest edition of the Hashing It Out live stream. I'm your host, Colin Harper, head of content and research at Luxor Technologies. So today we're going to be running through the usual Bitcoin mining metrics, hash price, ASIC prices, hash rate, all of that good stuff. Then we're going to jump into three news items this week. First and foremost, Binance's $500 million fund to buy distressed mining assets, to invest in Bitcoin mining companies and to extend them loans. Then we're going to go into Caruso's acquisition of Great American Mining. And then we'll wrap up with the latest on Senator Warren and the U.S. Congressional Democrats' attempt to put scrutiny on Bitcoin miners in Texas. So without further ado, let's hop right into it. So not much happened since our live stream last week in terms of hash price. We've actually seen hash price bump up just a little bit from its lows from last week. Now, that being said, we did have quite the brutal week last week after the 13.55% difficulty adjustment. So as you can see, last week hash price started off at about 6, almost 7 cents per terahash per day, and throughout the week Bitcoin tanked and it got to as low as 6.5 cents per terahash per day. Since then we have recovered just a little bit. In fact, last week we got up to just above 7 cents per terahash per day, and now we're right back at that 7 cents per terahash per day level. All that being said, last week we did hit a new all-time low for hash price after that very steep difficulty adjustment. We were hoping that with that difficulty adjustment, we might see some reprieve with the next one, as Bitcoin mining's difficulty rises and profitability gets squeezed. Typically, we see miners with, higher electricity costs or lower efficiency hardware turn off. Now, we're definitely starting to see some of that. Like I said last week, mid-gen hardware at 8 cents is now break even. We're also starting to see new-gen hardware like the S19 at 10 cents become break even, and it's almost on the threshold at 9 cents. And miners at 8 and 7 cents are starting to sweat just a little bit. But we haven't seen hash rate taper very much at all, at least not yet. Now, this could change, but it seems like miners are still adding on new hardware. I have it from a good source, Kareem Helmy, the Nonce Whisperer. If you guys don't know Kareem, I recommend y'all go follow him on Twitter. He's got some really sharp mining analysis, and he runs some nonce analysis looking at basically, what the estimated penetration of different mining hardware is based on the nonce patterns they create when they hash. He says that most of the hash rate that we're seeing come online right now is S19J Pros. Some of it is the S19 XP, and some of it is also new rigs like the M30S series. But most of it is coming from S19J Pro orders that were made earlier this year and last year. And but all that being said, these new machines are still being added on. We have not seen a hash rate taper at all. In fact, on the 7-day moving average over the last week, we've seen it go up again from 261 exahashes up to 269 today. But it looks like it's fallen just by 1 exahash at the time of this live stream. So all that being said, block times are still coming out pretty quickly. The average right now is 9 minutes and 38 seconds. So it's looking like the next difficulty adjustment could be in the ballpark of 3 to 4%. Depending on if we stay in this, 9 minutes and 30 seconds range. We're 53% through this current epoch. So, things could change. A lot of hash rate could come offline, and this could affect that. A lot of more hash rate could be added, and it could be an even steeper difficulty adjustment. But it looks like the next one is going to be positive as things stand currently. And as y'all obviously know, that would make for 2 positive adjustments in a row after a last week's brutal 13.5% difficulty adjustment, which was the highest since May of 2021. Now, with this next difficulty adjustment, I think it would be fair to say that if we do get a pretty high positive one, it's likely that the next one will be negative, but I also thought that last week when I was reporting on hash price hitting all-time low, and yet here we are. So we'll see what happens, but it's getting dicey out there. A lot of miners are either sweating or they're already at break even. Like I said, especially for those kind of with run-of-the-mill hosting costs or higher hosting costs and run-of-the-mill hardware. And just quickly before we hop into news, we're still seeing ASIC prices come down. Last week, we saw a pretty sizable correction with new gen hardware going from the average listing price going from 29 cents per terahash to 27.27.5 cents per terahash. Now that was about a 5% correction, and with hash price where it is, the time to actually ROI rigs, even at these prices, is a long time. So I expect this to, I expect these prices to continue to fall. We're still pretty far away, at least for listing prices, from the all-time low that we saw from last bear market in 2020 for new gen rigs and mid gen rigs. I believe new gen rigs, it was somewhere in the ballpark of 20 to 22 cents or $20 to $22 per terahash. It might have been actually $18 to $20 per terahash. And then for mid-gen rigs, it was something around $15 to $16 per terahash. So as you can see, oh, sorry, wrong screen. As you can see from this chart, we've still got a little ways to go for the new gen. We're getting closer for mid-gen. But, as I keep saying week in and week out, I definitely expect these prices to continue to fall this quarter. Probably will revisit all-time lows this quarter. If not, then we will revisit them pretty soon into Q1, unless Bitcoin's price does something drastic, like just absolutely surges from here, which again, not super likely. So that's it for our network data and for the ASIC data, and we're going to hop into our first news item, which is Binance Pool starting a $500 million fund to support Bitcoin mining, as CoinDesk's Sam Reynolds says. Now, support's doing a lot of work here, I would say. Binance sees an opportunity here to extend loans to Bitcoin miners, and they're going to take these opportunities if they can get them. And what this basically is Binance is going to have $500 million fund set aside for both private and public miners, to extend them loans so that they can maybe survive the bear market, buy new miners, things like that. It's looking like the duration of these loans, Binance says, are going to be anywhere from 18 to 24 months. And this article does not hit on interest rates and things like that, but I have this information right here in this Google Doc. And it's looking like the low end for these loans could be anywhere from 5 to 10%. I would imagine that is for very, how should we say it, very large scale miners, and those who can obviously have more petahash or more hash rate to bring to the table and potentially could pledge more collateral. It's not uncommon to see these loans range anywhere from 15 to 20%. So I would imagine that Binance, will probably also offer higher end interest rates somewhere in that ballpark. I don't know, but it wouldn't surprise me if we also saw some of those higher range interest rates as well. Now, according to this sheet that I pulled from one of my Telegram groups, Binance is saying that applicants must meet requirements of being both a Binance VIP user and maintain a hash rate of at least 500 petahashes a second for 24 months after the loan is issued. It's a lot of hash rate. So it's looking like these loans are definitely going to be targeted towards some of the bigger boys. I think Binance is going for, larger loan sizes for a smaller quantity of miners rather than smaller loans to to a larger quantity of miners. And it says that the pledge rate can be as high as anywhere from 70 to 75%. Now, Binance is saying that obviously they're going to take collateral for these loans. That could be in the form of physical assets like Bitcoin mining machines themselves, or digital assets like Bitcoin. And obviously, the kicker here, and I should have said this at the start, but the stipulation will be if you're taking on one of these loans, then you have to use Binance's pool. Now, we've seen this already from Grayscale. Digital currency groups fund and Foundry digital currency groups mining pool, where Grayscale started a new fund. We reported on this last week, where they're going to extend loans to miners in exchange for hash rate that gets pointed towards Foundry, right? So we can kind of see this similarly with Binance, with this strategy. Basically, you extend the loan to the miner, and then you use it as a growth hack to get more hash rate on your pool. If you have the funds for it, it's kind of a um, it's a pretty smart 1-2 punch, depending on how capitalized the miner is, and or like how much collateral they can give you, and also whether or not you feel like they'll be able to pay back the loan, right? And if they don't pay back the loan, then ostensibly you just take the collateral in the form of Bitcoin or in their mining equipment. So something like this is pretty shrewd tactic in the bear market, and also in some ways you could say kind of cutthroat, right? There's blood in the water. A lot of miners are bleeding. They're having trouble, especially some of the public ones who are inundated with debt, and high energy costs because they didn't lock in fixed PPAs. So something like this is a way to capitalize on that distress, try to grow your mining pool if you're Foundry or Binance, and also potentially maybe get some cheap assets, if these loans are defaulted on. So interesting trend to see play out. This is something that we're starting to see a lot more of this quarter. Jihan Wu, through his new venture BitDeer, has established up to a fund of $250 million. Well, they're seeking up to $250 million. BitDeer has pledged, I think, $50 million, and they want an additional $200 million to do a similar thing where they're going to buy distressed assets from Bitcoin miners, mainly the mining machines themselves. And with Binance and Grayscale's recent initiatives, it's a similar play, right? You're looking for miners who are in troubled spots. You're either going to buy assets off them for cheap, or you're going to extend loans to them and potentially get those assets down the road for cheaper as well. So again, something to keep an eye on. We're probably going to see maybe a little more of this quarter, but it's going to be a quarter of consolidation with things like this going on, right? Some miners who were overzealous in the bull run are not going to have enough income to be able to pay back their debts to keep operations running. So they're going to seek out predatory loans like these, or they're going to sell their assets in distressed asset sales, or like we've seen with Compute North recently with their Chapter 11, go bankrupt and sell them through asset auctions that way. Speaking of acquisitions, last week, Crusoe Mining, a off-grid nat gas mining Bitcoin mining company, acquired Great American Mining, another off-grid nat gas Bitcoin miner, for an undisclosed amount. According to the deal, Crusoe is adding about over 10 megawatts of capacity and about 4,000 ASICs to its fleet. So, pretty decent size, not huge, but, a good win for Crusoe, assuming that they got a good price on these rigs and on that capacity, which, going back to the distressed, the theme of distressed miners so far this year, probably a pretty good deal for Crusoe if GAM is selling in a bear market. According to this Block article, it says that overall this acquisition will increase Crusoe's capacity by 9%, and it will also give them access to some of Crusoe's facilities where they produce mining containers and things like that. So pretty cool to see. Pretty cool to see these acquisitions take place. Like I was saying earlier, or just in the last segment, we're starting to see a lot of consolidation across the mining front. Some miners are starting to go under. They're starting to be distressed, and they're looking for ways to exit, right, or ways to keep their business alive. In this case, Great American Mining sold its business to Crusoe. Crusoe gets to fatten up its hash rate and its capacity. And also, gets to add to its stack. Now it can create. I don't want to I don't want to say anything false here because I don't know exactly. I don't know exactly what Crusoe or what Great American Mining, what they build. But it does say here, like I said, that they will be able to. If I can find the part of the article that says this. They have a facility where they produce, infrastructure for their Bitcoin mining side. So all that said, Crusoe can add to its hash rate and also add to its repertoire with having having in-house fabrication for Bitcoin mining assets. I said it last segment, and I'll say it again. Just expect more of this, especially with the recent news about Compute North going bankrupt. We're going to start seeing a lot of these things. Compute North's asset sale starts on November 1st, I believe, and that's going to attract a lot of bidders from across the mining industry looking for cheap assets like Bitcoin mining rigs, containers, and maybe even whole data centers if they can afford it. And in Q4, I expect to see a lot more of this and some stuff that goes underreported, right? Because there are some smaller private miners who just are not going to be able to make the headlines. They don't have public relations teams, or the people buying them don't have public relations teams. But it's likely to see that it's highly likely that we'll see this trend continue into the bear market, especially as hash price continues to get compressed and miners continue feeling the heat. And with Crusoe and Great American Mining wrapped up, we will go to our last item on today's news docket, which is the Senator Warren, Elizabeth Warren in the U.S. Senate, is leading some Senate and House representatives in a probe into Bitcoin mining's energy use in Texas. So Senator Warren has been probably the most outspoken opponent against Bitcoin mining, and specifically the Texas instance in the U.S. She has made her, distaste for the industry known through anything from tweets to hearings in Congress. And it's looking like right now she is leading a group of 7 Democratic lawmakers to look into the Bitcoin mining industry in Texas in regards to its carbon emissions and its impact on the grid and local consumers. That kind of says it all in a letter on Wednesday. She addressed to Pablo Vegas, the CEO of ERCOT. She and the group expressed concerns that Bitcoin mining's enormous demand for energy in Texas is straining the state's grid. Obviously, we've seen Texas Bitcoin miners say that, in times of grid stress, these miners can power down and supply much needed power to the grid, as we saw in this summer in June and July and August. It looks like Senator Warren and her cohort do not buy this argument. And they are saying that, in fact, these Bitcoin miners are, responsible for the stress on the grid, which, I'm biased, obviously, because I work in the mining industry, but I think that that's kind of an outlandish statement. ERCOT gives out blocks of power ERCOT will only allocate as much power to purchasers or to clients and industrial clients as much as it has, right? ERCOT's not going around giving additional power to Bitcoin miners. They are not going to give more power than they think that they can feasibly generate based on their forecasts. And Bitcoin miners are not getting any special treatment here, right? If Bitcoin miners had not signed up for this energy, perhaps this energy would be sold to another industrial client, or it would just go unconsumed entirely, right? And in fact, I don't have it with me right now, but I read a very interesting article released by the EIA in the U.S., which is the energy. I don't know what the acronym stands for, but it's an association that tracks U.S. energy consumption and looks at different trends in the energy markets in the United States. And this article was saying that, in fact, demand was not the problem this summer when Texas faced its rolling blackouts. Instead, it was actually the unreliability of wind energy. Texas had a severe heat wave over the summer, and during heat waves, wind ain't blowing. And because of that, Texas's abundance of wind energy was just their wind assets were not producing energy during this time, right? And that had a lot to do with what strained the grid this summer, according to this report and this article that I was reading. And this is something that I've seen also a lot of energy buffs on Twitter and Bitcoin miners talking about how much wind underperformed during the heat wave. I think ERCOT budgeted something to like 15 to 20% of its in its forecast. It said that 15 to 20% of its energy would come, or that those wind turbines would produce at 15 to 20% capacity. So they're budgeting for a certain level of, gigawatts or megawatts and gigawatts from that production in their forecasts, and it produced basically under 5%. It was like 0 to 5% during that heat wave. So when you have something underperform that much, and it's not the majority of Texas's grid, obviously, but a consequential amount, then you're going to have problems with your energy production, right? And I think that kind of nuance like that is missing in political talking points like this when people talk about Bitcoin mining's energy consumption, um, especially when in regards to this. People often opponents often throw out this number, this 33 gigawatt worth of applications on its desk in ERCOT. That's just an absurd number. That's just the amount of people applying to hook up to ERCOT's grid as Bitcoin miners, but not nearly as many gigawatts are actually going to be allocated to Bitcoin miners in 2023, and in the years preceding it or succeeding it. In fact, as we talked about last week, I'm pretty sure the Texas Blockchain Council is actually walking back its estimates. It thought that by Q1 of 2024, 5 gigawatts of power will be online. I believe now it's somewhere around 3 gigawatts, I believe. So even what we thought we were going to have by the end of next year is being significantly walked back. ERCOT is really, it doesn't have as much capacity for these miners as they would like, as the miners would like, and they're starting to, approve fewer and fewer of these applications. And so once again, you see this 33 gigawatt get thrown around a lot, and some people even claim that that's how much is being consumed now or will be in the future, and that's just preposterous. So, I expect a lot of this. I expect a lot of pushback to continue from Capitol Hill and DC, especially in light of Ethereum moving to proof of stake. That's starting to become a huge talking point. People are saying, well, why can't Bitcoin do that? And, it's going to take, I think, a lot of nuanced discussion and a lot of educating to try to, if not convince people, at least show them the other side of the argument as to why proof of work is a more robust consensus mechanism for censorship resistance and for a permissionless blockchain, and also to educate people on how energy markets work and to say Bitcoin miners are not really the problem here, right? If you want to make sure that your grid is reliable, you need to do things on the base load level, like, optimizing for, efficient baseload energies like natural gas, nuclear, things like that. You can't really you can't really address any of these things like rolling blackouts, things like that, by just getting rid of Bitcoin mining. It's going to take an actual serious look at our energy infrastructure and overhauling it accordingly. And that is it for this episode, y'all. As always, really appreciate you tuning in. Thank you so much. If you haven't, please subscribe to our YouTube channel and follow us on Twitter at HashrateIndex and at Luxor Tech Team. And if you would like to receive written analysis like this every week in your inbox, please subscribe to our newsletter at hashrateindex.com/blog. And one last note, we have our Q3 report coming out this week. I think that I will have it done by Wednesday, but if not, it will definitely be Thursday. I'm trying to push for Wednesday, though, because that's when I would like to get it out. So be on the lookout for that. I'll be sending out a newsletter with kind of a breakdown of some of the more salient findings that also includes a download link to the report in the newsletter. But keep an eye out for that. It'll be on the newsletter, and I'll also post it on social media on Twitter. And that's it. So happy hashing, y'all. Have a great week, and we'll see you next time. Oh, and as for next week's live stream, it will be on Tuesday, not Monday, because your boy is getting hits this week, and he's going to be taking Monday off. So with all of that, happy hashing. Y'all have a great week.